Welcome to this edition of Insider Secrets, the weekly podcast that turns real estate investing goals into reality. Each show, we interview guests who are seasoned real estate professionals, actively closing and managing real estate deals. Mike is the founder of My Core Intentions and would like to help you make your real estate investing dreams a reality. Mike coaches you to buy investment real estate, creating short-term cash flow and long-term wealth. Your host and real estate coach, Mike Morawski, has more than 30 years of real estate investing and property management experience. Here's your host, Mike.
Hey, good morning, everybody. It's Mike, and welcome. Glad that you are here today. If you're new to the show, thanks for showing up, or thanks for stumbling across us. Glad that you're here. Hopefully, we'll be able to deliver some information, some knowledge, some content to you that's going to help you grow your business. Today, we're going to talk about creating generational wealth and how do we help do that in your life. My guest today is going to bring some content to the platform that I think will be eye-opening for you, maybe something that you might not even have heard of or heard about before. I know the first time I heard about what we're going to talk about today, I was really enlightened and I thought, wow, what a great concept. So we'll talk about that a little bit today. I always start talking about intentions. What are your intentions? So what your intentions are for the weekend. Maybe you're still doing some work or getting some things done around the house or trying to spend some time with family. Whatever that is, make sure that you're focused on your intentions. The only way we grow, the only way we progress our business is by being intentional about what we do. So whether it's looking for deals, whether it's raising capital, whether it's managing a deal or stabilizing a deal, we have to be intentional about those activities. Follow us on social media. I'd love you to be intentional about that. If you are on Instagram or LinkedIn, like us, love us there. We're always bringing good content out, helping you grow. If you're on YouTube this morning, please smash the subscribe button because there's always new information being put out there every day that's going to help you grow your business. So let me bring my guest in this morning. I'm joined by Jim Oliver from Southwest Florida. Jim's company is Create Tail Lind. Love that name. And we are going to talk about infinite banking and creating generational wealth by way of doing that. Hey, Jim, how are you?
I'm good, Mike. How are you? Thank you for having me on.
Great. This is the first time we actually get to meet, and I can already tell that we have a connection between us. So who connected us, Margie or?
I think, was it Marie or Christina?
Yeah. I always love being connected and having people on my show that come from these booking agencies because there's always somebody new that you haven't met before. It's been a great way to meet people and build relationships. I'm glad that you're here.
Yeah, thank you. Thanks for having me. I'm excited to get to talk to your audience today and get to talk to you.
So Southwest Florida, where's that?
Yeah, so just a little north. I always say Naples because I'm actually technically in Estero, which is as you go north from Naples, it goes Naples, Bonita Springs, Estero, Fort Myers. And where Estero is this little village that's only been around for like 6 years, but it's growing like crazy.
Wow. Yeah, I think all of Southwest Florida is growing like crazy, really.
It is. And after the hurricane last September, Fort Myers Beach, all that area, we were out of our house for 7 months getting it repaired. And Southwest Florida is going to look a lot different in the next 5 years.
Yeah, I own some real estate up in Tampa, so we just missed that, right? So very fortunate, very grateful. Sorry for the losses other people had like yourself. We had one tree fall and take a corner of a building off, and very grateful for that. So Jim, I always like to start my show, especially when I meet new people, with one question. And I always say I'm going to write a book on this and kind of have started that process already. But in one word, what best describes you personally and professionally?
I would say giver.
Giver.
Right? And the reason I would say that, Mike, is as a kid, I was growing up. I grew up very poor. I grew up in Los Angeles. I saw this wealth around me, and I didn't understand why. And I studied it my whole life. I went down the wrong rabbit hole more than one time. I spent 15 years as a full service financial planner, fee-based, thinking that was the key to wealth, that was the key to money. And then I finally figured it out at 38 and 58 now. And I've spent the last 20 years giving people that knowledge that I learned. And I love serving other people, and I love giving back and showing them and helping change their lives in the area of money and independence and freedom.
I think that's awesome. I think that's really the way we should be in the world. And I think you and I come from a generation that we learn differently than some of the younger people learn today. And I think that philosophy of giving to others and helping others and supporting others isn't taught enough today. So I appreciate you doing that. I'm going to ask an offshoot question around that, though. Where, I don't know why I'm even thinking of this, but where in your life did somebody give to you to make you realize that was a way that you should behave?
You know, what's funny is, Mike, I would say that I got lessons in my life that I didn't really anticipate or appreciate at the time. And I'm not sure anybody gave me that. I think it was actually the fact that people didn't give me that knowledge. I didn't feel like they were sharing with me that information. And I felt like people did a lot of things like that and kept it. They wanted to compete with other people in the office as a financial planner. And because I didn't get that, I grew in confidence. I give all of my stuff away. I didn't feel like I was competing with anybody. I was more collaborating with people, but I didn't care about the competition. And as I did that, I grew professionally, and I realized, you know what? If I came up with the greatest presentation of all time, I could give it to everybody else. They still can't do it like me. They still can't do it with the passion, because the development of it came from the passion, the systems, everything else. So I think it came from actually the opposite of somebody giving to me. I think it came from someone not giving to me.
Yeah, that's awesome. Zig Ziglar said years ago, and I don't know if you're a Zig fan, but he said that you can have everything in life that you want if you help enough other people get what they want. And,
yeah, Mike, I use it all the time because I heard that 20 times before it sunk in. I'm a slow learner, man. I would say, yeah, I got it. I'd poo-poo that. And the nuggets that you learn from Zig or Tony Robbins or Earl Nightingale, I just poo-pooed those things in my 20s, and I just was tunnel focused on like assets under management and client acquisition, and I didn't realize until I was in my 30s, oh my gosh, I've been doing this wrong. I didn't listen. I heard it, but I didn't listen.
Yeah. I sold residential real estate for a number of years before I went in the apartment business. And when I first got into business, it was just a churn and burn business for me. I prospected every day and just blew through people. And it took me like 3 years of that model before I got it and really started to build into people then. And once I did that, my business changed like that. And I sold a lot of houses, but I think you can't have that churn and burn mentality. So let's do this. Let's talk about your background a little bit. You said you grew up in LA. You were a financial planner for a number of years. What's your history and how'd you get to doing what you're doing today?
Yeah, so what I did is, first of all, I grew up in foster homes till I was 7, and then I was adopted. And I grew up, my dad drove a trash truck and my mom worked at a casket factory. And those are two important things because we grew up poor. And I was fascinated with money. I really was interested in money. So when I went through school, got out of school, and I went from LA to the Midwest. All right. And so it was like a total change in environment, but I loved the Midwest. I loved the people in the Midwest. I loved how everybody was nice in the Midwest. Sorry, Californians, not to say that you're not nice, but people in the Midwest are just generally, everyone is nice and everybody wants to get to know you. But when I got out of school, I was running these Gold's gyms. I know you can't tell it now, but back in the day, in the 80s, I was running these Gold's gyms. Things were going really well, but I wanted more. I wasn't ever going to get wealthy just running these gyms. And I had a tunnel vision of getting wealthy. And so I went to Denver, where my soon-to-be wife was from, and started my career not knowing a soul. And I did that for 15 years, thinking that this is how you help your clients become wealthy. And then one day, Mike, I'm analyzing, and this is before spreadsheets and CRMs and everything else. I'm analyzing our average return for our clients. And it says it's like 9.38%. This is what all the platforms say. And I said, wait a minute. It doesn't seem like these accounts are growing at 9.38%. So I took out expenses, commissions, fees, everything, taxes. And it was around 4% they were actually getting. Now that's before I didn't take out inflation, which means they were basically getting nothing, no growth, right? And I went, wait a minute, that's crazy. So then I said, okay, I'm going to analyze. I've got a lot of wealthy clients. How did they make their money? And I looked at it, and it took me about a week of analyzing it. And I said, again, it's before Excel. And I said, oh my gosh, these guys are all business owners or in the real estate business, which you're a business owner if you're a real estate investor. And I took out all the people that got lucky. They were the janitor at Google. I got rid of that. And I went, oh my gosh, I've been teaching people the wrong thing.
Huh.
This is not how to get wealthy. It's making me wealthy. It's making Wall Street wealthy, the banks wealthy, the government wealthy, but not the client. And so I met this gentleman at the time who was in his 70s, and his name was Nelson Nash, and he's kind of the godfather of infinite banking. And I went to this 10-hour seminar. And again, like you said, Mike, we're from the same generation. So what do? We go to seminars right back in the day. This is 20 years ago.
Yeah, I go to seminars today, Jim.
I do too. I love it because you know what? I learn something every time. But this seminar was 10 hours. And I thought, this guy's either crazy or he's brilliant. And after 10 hours, I wasn't sure. So I went up and I asked him a bunch of questions. He looked at me like I arrived on the short bus because all my questions I felt were dumb. And then he said, but I'm doing another one of these in 3 weeks. So I went back to Texas 3 weeks later, did it again. And after that one, it hit me. And I was like, this guy's brilliant. We tell people to put our money in Wall Street and tie it up for 20, 30, 40 years while they're paying the bank interest and they're letting everybody else that's not unconventional make tons of money in real estate and businesses. And I'm going to stop that. I'm going to do this. I went to every client. I said, okay, we're pivoting from this to this. And not very many people got that excited about it because they wanted to be passive, right? They wanted somebody else to make money for them. And I was like, no, that doesn't work. You can do that, but do it in real estate, do it in businesses, hire somebody, a younger person to take over your business, whatever it is. That's how I got doing what I'm doing. And all of a sudden, you wouldn't believe it, Mike. And like some people in 3 or 4 years, they were financially independent when it was taking the average common strategy 20, 30, 40 years to build up the sum of money that you live off of and you hope you don't run out of money.
Wow. So I've heard that statistic before, that Wall Street will tell you, hey, you're going to make 8%, 9%, the average over 30 years. But when you start to back fees and costs out of it, you're down to 4%. So it's interesting that you said that today in that light. So you explain in layman's terms for people, what is infinite banking?
So what infinite banking is, it's a way to take over the banking function in your life to solve one problem we all have, is that we finance every single thing that you buy. You either pay somebody else interest or you give up interest that you could have earned somewhere else.
Okay, I'm going to ask you to say that again, because I think That's probably one of the clearest explanations I've ever heard.
So yeah, infinite banking is taking over the banking function to solve one problem we all have, every human in the United States, is that you finance every single thing that you buy. You either pay interest to somebody else or you give up interest that money could have earned if you put it somewhere else, i.e. in real estate or wherever.
So I can take money and put it in a platform and borrow against that money and pay that money back to me and earn and pay myself interest too. So I can become the bank where I'm taking, I'm creating more money because of that model versus if I go to the bank and pay the interest out.
Absolutely. Our need for finance over our lifetime is much greater than our need for investing in Wall Street or a 401k or something like that. And Mike, what happens is you put this money in a very specially designed insurance contract. Because you have it in an insurance contract that's been around, by the way, in England for 350 years and been in the United States for over 200 years before federal income tax. So there are tax advantages with certain insurance contracts that precede federal income tax. And you put the money in there, it grows tax-free, you can use it tax-free. And here's how you use it. This is really important, is because you have that money in that insurance contract, the insurance company has to give you their money. Now, let me say that again. You have money sitting in this tax shelter, growing every day, guaranteed, tax-free. The insurance company has to give you their money. As a loan, you're borrowing their money, interest only, contractual. Okay, so as a real estate investor, I know you're going to get this like that. It's kind of like this. If I would let you borrow, Mike, $100 million today, and your only obligation was you got to pay me 5% interest or 4% interest, let's just say 5% interest 1 year from today, would you take the loan?
Absolutely.
Absolutely. When somebody says no, then I always worry about them, but I knew that there was no way that you weren't going to say yes because you know what to do with the money.
Well, that's the question there, is what would you do with the $100 million?
So here's what I would do, okay? I would take your 100 million if you offered me that deal. I would go out and either from the seller or the bank, I would borrow another $400 million, 80% loan to value. I can get that on that kind of money when I've got that much cash. And I'm going to buy 500 million of real estate.
Okay. So listen, I want you to say that again because I want people to get that, because you just talked about three different things, right?
Yeah.
And people will miss this unless it's explained right. So you're taking this, you're borrowing money from the insurance company against your platform. Yeah. Your platform stays intact, gaining interest. You take the borrowed money and you go and you are able to get more money with the borrowed money.
Are you ready to skyrocket your investment portfolio and leave a legacy? Are you tired of inconsistent returns received in the stock market? Then it's time you take a look at alternative investment options like a passive investment in multifamily real estate. No tenants, trash, or toilets. Just a solid return on an annual investment, including quarterly returns along the way. These lower risk and secure assets are also a great hedge against inflation. If you want to hear more about these types of opportunities, email me directly to schedule a 15-minute consultation to see if you qualify. You can email me at mike@mycoreintentions.com.
Yep.
And buy even more real estate.
Absolutely. Yes. And so then I'm going to take your money and I'm going to go get money from the bank or the seller, either one. And when I invest in real estate across the board, and I would share this with anybody, 25% cash on cash, I can do that all day long. I don't care if you're watching and you think, hey, Jim, I get 20, not 25. It's just a math thing. Okay. It's not a big deal because I'll show you why. So 1 year from today, I take your money, I go get money from the bank, and I make 25 million bucks. I call you and say, hey, Mike, I got your check for your interest. I'd like to fly up, take you to dinner, and give you your check. I hand you a check for 5 million bucks, and you say, hey, Jim, do you want to pay any principal? And I say, nope, see you next year. I make 20, you make 5. Now, I'll do that forever, right? I mean, so you're leveraging and you're buying real estate already. The only people that say that they don't get this is they don't know what to do with the money. And that's okay because other people do if you don't. But think about this too. By year 10 of this, I put in $1, I have $1.50 to go put in real estate. Mike, I win. Now think about that. So now I'm taking every dollar and the insurance company has to give me $1.50. Now, it's not because that you're getting a 50% rate of return on that deposit, because the insurance contract, though, is meant to be this long-term thing that people like the Northwestern Mutuals, the Mass Mutuals of the world, they want you to put that money in there, keep it there for 20, 30, 40 years. Remember, it kind of sounds like Wall Street. And they want you to touch it, but we're going to touch it. We're going to use it as collateral and get the loan from the insurance company to where now we're going out and buying things, buying companies, buying real estate, and we don't have any of our money in it.
Okay, so I need to ask a couple of just generic grind-in questions.
Yeah.
The first one is, and I think I know the answer to this, but let's bring it to the forefront for the listeners, is what is the difference between me putting money in this versus me putting money in my self-directed IRA that I can still go and put money in an asset?
So there's a couple of differences. One difference is the funding limits. So in your self-directed IRA, yeah, you might have where it's a 401k, you're gonna convert it to an IRA, self-directed IRA. But if you're building that, you really can't put enough money in it to make it substantial. We have people that are putting millions of dollars in these things because they have millions of dollars flowing in real estate. That's one. The second thing is you can never put in $1 and have $1.50 to use. And by the way, here's the crazy thing is I said that's year 10 just because it's just a reference point. But every year after that, Mike, it only gets better. Guaranteed. The cash, that's why we use a whole life policy. It doesn't have to be sexy. It has to be guaranteed. And you can't put in $1 and have $1.50 to go use in your self-directed IRA. So those are two simple keys of the difference. And here's the other thing is, you go out and buy real estate. It cash flows. What do you do with the cash? Don't put it in your local bank and let them go make money on it. You put it back in your insurance contract so that you can borrow more money from the insurance company to go put in real estate. So you have this money pool that you can flow money through. And if you sell something, you can put a windfall in there. And we all, as real estate investors, always have windfalls sooner or later that we need a place to put the money until we use it again.
So let's try and bring this into perspective for my average listener, not $100 million listener.
Yeah.
So,
because it gets people's attention, Mike.
Yeah, you got my attention too. So let's say I have $100,000 to go fund a whole life policy and do this program. I make that deposit today. I open that up today. How soon can I use my $100,000?
Week or two. Once we can prove that it left your bank, it's in the insurance company's bank, you take a loan. And look, we're not tied to any one insurance company. We use a few of them, up to a half a dozen, depending on if you have good health, bad health. But with some of them, you can have it wired. I've seen it the same day. But again, when you establish the policy the first time, you got to show that all the money has moved where it's supposed to move. So that makes it could be the same. Let's just say next day, to be fair.
Can I use a whole 100,000 right away?
The first year you cannot. Now that's the key, because if you could use, if there was no cash drag or anything, then I'd have a virtual line out my door, right? But in that first year, there's a cash drag. The way we design the insurance policy, after that, there really isn't. And at year 4 and beyond, it starts to leverage, meaning every dollar you put in, you have more than $1 to use. So you're not going to start first, Mike, but you're going to end first. But one thing I want to say on that really quick, because I want the younger people in the audience to think about this. And you alluded to it earlier that you and I are the same generation. And I don't want to disappoint somebody who's really young out there, but there's not that many things in your life that get more efficient as you get older. Like, they get better as you get older. Guaranteed. Okay. This gets better every year. It gets more efficient every single year till the day you die.
It's what I tell people about depreciation. I say it's the only gift left the government gives you.
Well, here's the other thing is, I just had this conversation with a friend of mine yesterday. She makes a couple $1,000,000 a year, and she pays everything in tax. And I told her about a friend of mine who happens to be 35 years old, who makes about $6 million a year in real estate and doesn't pay any tax. And I said, so you're really not making $2 million a year. You're making like 1.2, and the government's making the rest.
Yep, 100%. So what is the cash drag the first year?
It depends on your age and everything else, but it's somewhere between, say, 38% and 25%.
Okay, and then year 2,
it's pretty close to even. The way we design it, we try to take that hit in that first year so that we can recover from it quicker. And then the next year, there's an anomaly, Mike. It's about the same. And then every year after that, every dollar that you put in, you have a little bit more. By year 5, if you put in 100,000, and you don't have to put 100 grand in every year. You can flow money through that. It's hard to explain without drawing it out. But I've got lots of videos on our community, and I teach people this. It's all free. I walk you through Nelson Nash's book in 2 hours and 30 minutes, and it's free. But after the 4th year, it starts to leverage. So every dollar you put in, you might have $1, $1.05, then $1.08, then $1.12. And again, the reason I know the numbers at 10 years is I try to tell people we have to think long term. Real estate isn't get rich quick. It's get comfortable, wealthy over time. Now, it could be 4 or 5 years. I've seen these young guys crazy, some of the stuff that they've done. And I know that you've had some great success and seen great success quickly, people that you've helped in real estate. I'm not saying it's going to take you 20, 30 years, but I'm saying it's not overnight. With wealth and generational wealth, I want you to think at least 3 generations ahead. And it's all about taxes. That's the same thing you just said about depreciation. I couldn't agree with you more. Every year, this time of year especially, what am I thinking? How am I going to get some depreciation between now and the end of the year? And that's why you love real estate. By the way, Mike, this is a side note. Don't you love that everybody's down on real estate? Interest rates are high and property valuations and insurance. And I'm like, yeah, it's terrible. It's the same thing I tell people about Southwest Florida in the summer. It's too hot. You want to go back north. Why? Because then there's nobody here. I got the whole place to myself.
Good for you. So I want to just go back to this cash drag thing for a minute. So let's say I put 100,000 in and I only can get 40 out year 1.
60 something.
Okay. All right. So 60. Can I take that 60 and go and get another loan that will give me 3 times that? And now I have 120 to go invest.
Yes, that's what you do. What I show somebody is I show somebody over 4 years, and I use $100,000, Mike, and I use it every year just so we can see the cash flow, only because then I can see the percentages. I went to public school. I like the math to be simple. I put in 100 grand. Let's just say I had 60. I'll make it worst case scenario. So I'm going to take that 60. I'm going to use it as a 20 or 30% down payment. And the reason I normally show 20, because I'm going to go to the seller, I'm going to get them to do 10 or 0 deal. Or I'm going to go to the bank and I might get 70% loan to value, but I'm going to average 80% loan to value. So I'm going to go buy $300,000 of real estate. On my 100 grand, I'm going to get 25% cash on cash. Again, it's just an example. Mike, if I use 15, it works great. If I use 35, it works great. Some of my real estate investors that are doing certain things, they tell me they're getting 70% cash on cash. So I make 25 grand on that. That comes back into my bank. So the next year, I get to use that 25 grand again. But remember, I said I was going to put in 100 grand and I'm going to have like high 90s, but let's just call it 100. Now I have 125 to use as a 20% down payment to go buy a property, and I only put 100 in. So now I'm leveraging already. And then I'm going to go buy, again, to make the math easy, a $500,000 property. And I'm only putting 100 of my 125 in. So now I've got $50,000 a year coming back into me. And in 2 years, I've got passive revenue of 50 grand. And I never say passive income. And the reason I don't, Mike, is because of what you said. I'm not going to pay tax on all this. Income I pay tax on.
Yeah.
It's because I'm going to do cost segregation, or I'm going to do some kind of depreciation program to where I'm not paying tax on all that money.
Right.
So think about it. I put 200 grand in and I've already got $50,000 of passive income. That's 25%.
And you help people structure all this.
Yep.
Okay.
I show you how to build this system. You show them how to invest in real estate. And all of a sudden, in just a few years, they win.
Yeah. And maybe moving forward, it makes sense for you and I to stay in a little bit better contact, because maybe we help each other on both sides. Because I know that I deal with some people that have some implications and have some cash issues where this would be helpful for them. And I'm sure you have people that are looking for opportunity.
Every day somebody will say to me, Jim, what do I do with the money? And I'll say, okay, watch this podcast, watch this. And I can't recommend somebody, but I can introduce somebody and say, here's somebody that could teach you how to do this, or do it with you, or you can do it passively through them, or whatever. And you know what, Mike? I don't do it with somebody who's been doing this for 4 years. I want somebody that's gotten kicked in the teeth a few times.
Thank you.
I have.
My dentist loves me.
Yeah, me too. I wasn't born with any of these. They were out a long time ago.
Thanks for being here. And I want people listening in today to be encouraged by this conversation and to reach out to Jim. Jim, how do people connect with you? I've been so enthralled, I didn't even put your banner across the bottom today.
No, that's great. Just go to our website, Create Tailwind. We have also a community. If you go to community.createtailwind.com, Mike, or go on the Apple or Android store and search Create Tailwind, all one word, and you can find this app. It's got all kinds of courses on infinite banking, and I literally walk people through the book. And anybody that's listening to this show and you reach out to me, I'll send you the book for free.
Tell people how to get that book. That's Jim Nash, or Nash's book, right?
Nelson Nash's book. It's 92 pages. It's the best book. It's the only book you need to read about infinite banking. Trust me, it is the book. Just send me an email, jimoliver@createtailwind, all one word, .com, and I will send you a book directly from the Nelson Nash Institute. Nelson's passed away, but his son-in-law, I have a deal with his son-in-law where they send out the books for me. It'll go out in a day or less.
Do you have any events coming up or anywhere you're speaking on this matter at all?
I speak on it almost every day online. I just changed our people. You're further along in this than I am when you're doing live events and everything else online. So I would tell you, join our community and then stay tuned, because we're going to do more of this, but we're just behind where you guys are at.
Yeah. I'll tell you what, I'm going to have you come speak at my summit.
I'd love to.
This year. So we'll reconnect on that for sure. And so, Jim, I appreciate you being here. I like to always wind down with a couple bonus questions. Other than Nelson Nash's book, what is the best book you ever read?
The Go-Giver.
Berg. Love
Bob
that.
Berg. Yep. The 5 stratospheric laws of success. And if you haven't read that book, Mike, I've given that book away. And I give 2 books away all the time. Well, 3. I give Nelson Nash's book, but that's specific. I give The Strangest Secret and I give The Go-Giver away.
Strangest Secret, Earl Nightingale.
Yeah.
How about the best restaurant you've ever eaten at?
I'm a Del Frisco's guy, man. I'm telling you, I know it's a chain, but I love Del Frisco's.
Love that. That's awesome. Hey, thanks for being here. I'm going to move you to the back room. I'm going to say goodbye.
Thank you, Mike.
And I appreciate you hang out with me for a minute, okay?
Okay.
Hey, everybody. I have to say that was probably the clearest conversation I've ever had with anybody on infinite banking. I've had a couple other guests on, but Jim really delivers some great content and strategy. And I believe that it goes to the strategy. How are you going to use your money? How's that money going to create wealth for you? How's it going to help you grow forward? So I'm going to encourage you to reach out to Jim, get a copy of the book, talk with him on your own about how you build your own wealth using this strategy and using my strategy, which is real estate investing, multifamily. So if you have capital that you're putting into a real estate offering, you might want to buy it through this platform versus just cash on the sideline, because you can still take advantage of the depreciation and some of the other benefits. So, hey, I want to thank you again for being here today. My guest was awesome. There's always information out there about live events coming up, our webinars, our offerings, and follow us and like us and love us on social media. Everybody have a great week. Glad that you were here and had the opportunity to listen in and absorb this information.
Thank you, Mike, and thank you for joining us for another great episode of Insider Secrets. As always, Insider Secrets is brought to you by My Core Intentions. Wherever you hang out on social media, you will find Mike and My Core Intentions. Please like and follow us to get the most up-to-date real estate investing trends. Visit mycoreintentions.com, where you can get expert coaching on all things real estate investing and property management. If you're looking to become an expert, Mike's coaching will help you scale your real estate investment business. We're looking forward to having you back again next week for more Insider Secrets.